Bit more detail on the ECB. It's cut its deposit rate from 4% to 3.75%, its first move lower since 2019. The bank had all but promised the cut after seeing inflation fall to just over its 2% target. However, it says that progress has stalled recently on inflation, and the latest wage and price data has come in stronger than expected, raising fears that inflation may prove sticky. ECB President Christine Lagarde saying we are not pre-committing to a particular rate path. Is the dialing back process underway? There's a strong likelihood. So with that in mind, let's check in with Lucas Santos, who's joining us from ACY Securities. Hello. Good morning to you.
Good to be back here.
Yeah, thanks for coming in. So ECB, I mean, it was very well telegraphed. So what was in the market reaction, if anything?
Okay, so let's just start on the beginning of everything, right? 70% of the economists were already predicting 3 cuts for this year. And the first one started yesterday, and they were right. So we got a 25 basis points cut yesterday. As you just mentioned, I was listening carefully what you're saying, and as you just mentioned, the market did fade away. Mm-hmm. While they had the 25 basis points cut, if you look to euro dollar, for instance, that's the major,
barometer?
Major barometer. Nothing happened.
Yeah.
Literally nothing. It went up a little bit, it went down a little bit, and this morning was exactly the same spot as it were before the ECB. Mm-hmm. It didn't even have like a big uptick or downtick. No, it's just a little bit somewhere. So it makes me question myself. Now, everyone was expecting the cut, all right? Mm-hmm. We did have the cut. So now, what is the market expecting? Inflation to reduce down, or is it another cut? Because we're expecting 3 cuts. The first one is done, so another 2 this year. Probably will happen, different from the Fed. But, when we have inflation still above the target, 2.6, 2.8, that range, and then only coming back to target in 2026. Mm-hmm. So there is a year and a half yet to work on to it. So 2 cuts this year, how many cuts next year? Until we get to target in 2026. I do believe that most probably euro dollar will weakness because the Fed will maintain the rates higher for longer. And this is the rhetoric that Jerome Powell have been saying to the media, but the market seems to not listen to it. Mm-hmm. As completely different opposite for the ECB. ECB is more, okay, we're going to cut if needed, but I don't think they will continue to cut as they would. Let's say last year everyone was expecting 7 cuts from the Fed. Now everyone's expecting another 2 cuts from the ECB. Most probably 1, because 2 is still a bit of a push. Remember, inflation can come high again. Yeah. Right? It's not because it's on 2.6 and now decreasing. Yeah. It can come to 3.
And they don't want to make a policy mistake. So your thinking is 1 more is most likely from the ECB. Part and parcel because the Fed will be more patient than you think that the market necessarily is pricing in right now.
Correct.
An interesting point will come tonight, won't it, with the jobs data?
Oh, yeah, that's exactly. So the NFP, that's a very, very big take. Okay, yesterday I was talking with some of the guys on the trading floor, like, okay, euro dollar will probably come down with this cut, and then tomorrow NFP will come lower, and then euro dollar will go up. So basically a pump and dump, let's say, right? But that didn't happen. Right. So I was like, okay.
Back to the drawing board.
Yeah, back to the drawing board. What are we going to do tonight then? Because most probably NFP will come lower, all right? They are expecting to be higher, but I want to remember as well that last month we did have a lower NFP, but that was after 6 months of consecutive high NFP, right? Same goes for the inflation on USA. We did have a downtick on the CPI, but still have a lot to be done with 3.2 something around those numbers. If I don't misunderstood here, 3.2, 3.3 inflation, and this is why the Fed will continue to maintain. Now, Nathan Bray, one of the traders from ACY, he always says, is it because they wanted or is it because they needed to cut? It's most probably because they needed to cut, like ECB needed to cut. Inflation came down beautifully. Now they needed to cut. Otherwise, they would be suffocating the economy. And suffocating the economy with higher rates, it's definitely not a good option to be done. Now, coming back to the NFP, most probably we will have a lower NFP tonight, dragging the US dollar continuously down and down and down. If we look to the US dollar index, trading right now at 104,600, I can't remember this morning price. Most probably we will have something around 103. So coming all the way down to 103, and then gold will probably have a huge uptick. All of this macro scenario, crazy macro scenario, Fed, ECB, the Bank of Canada, Bank of Japan, Australia, now ANZ just from February to May, isn't it? Most probably gold will take advantage of it, and we'll go to 3,000 this year.
So buy gold.
Yes, if I could say that, yes, I think gold is it's one of the best takes for this year.